Hey, hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about the economic data, how that impacts the overall markets with some market analysis. Maybe we'll sprinkle in a little geopolitical fodder to round that all off, and then talk about some option strategies we could implement based on those assumptions we come up with. All right, so across the pond, what do we have going on? Not really a whole lot going on today, actually. We did get European consumer price index, 8.1%, still pretty high there. Also stripping out some of the more volatile aspects of that, being food, energy, things that are going to fluctuate on like a monthly basis, really, we could see. Just no real tell on when inflation is going to hit food or energy, like gas prices, right? Coming in at 3.8%. Something I want to talk about here is crude oil. We got it coming off. Now, something we talk about is indecision, right? We see it at the top of markets and at the bottom of moves. We have a trending, upward trending market here. And yesterday we got a nice bottoming doji, hangman doji, if you will. But what we're getting right now is a counter-opposing one. So anytime we get these counter-opposing dojis, 2 days of indecision in a row, it generally signals that there is going to be a continuation in that trading pattern. So in this case, we are in a negative trading pattern here. That would make us assume that if we get another doji, basically mirroring the previous days, that is a continuation. 2 days of indecision usually brings it back down. So I would expect us next week to start coming down and really testing this 50-day simple moving average. Really, it's going to be data dependent and geopolitical dependent there, folks, because it's all about supply and demand right now, right? We know that there's a crimp in supply over in Europe, but here in the United States, ours is due to policy and the fact that we aren't opening up any more new ground, if you will, for pumping oil. And that said, that if we just started talking about opening this stuff up, I think we would really see this crude oil start to crater. I don't know why I don't have crude oil up anymore. I started moving a little too fast, I guess. There we go. Crude oil should start to really slide. That will help out the broader economy. This is the main thing that is slowing the economy and causing pain, the pain at the pump, if you will. All right, so we've got bonds moving higher again. I would not expect us to see a whole lot of upward momentum here. This is the time where we look to sell covered calls in something like bonds using ETFs and other things. So we're trying to lower overall cost basis in our portfolios that are really bond heavy. So folks, you and I all have bonds in our portfolio, whether it's a 401k or something like that. That is going to be really getting decimated right now. Now you can lower overall cost basis in your trading account. Think about it as the entire portfolio as one. Just because you can't really trade in your 401k doesn't mean you can't go in there and start hedging in a different platform, really. And I talk about how you can do that in those videos. So please check those out at Pro Trader Strategies. Gold futures, I'm really thinking gold needs to start making some marches here to the upside. Just really surprising. You would expect during really high inflation and worry like a recession that folks would be parking their money in gold. It's just not happening right now. Hey, there's a convention going on down in Miami right now, and it's all about cryptocurrencies. And really what they're talking about is the fear that's going on, because some of these newer crypto traders that got in a little bit late on the game are the ones that are going to be feeling the pain. They're all talking like they're holding it still. So some of this slide, not really the long-term crypto craze guys. So they're looking at it as a long-term investment. They're not looking at it as a trade. And I don't know. I would look at it as a trade, or at least to look to hedge it. They don't even like to do that usually. All right. Again, with some of these marks we've talked about the past couple of days, we've achieved that 11,250 here in the NASDAQ. That was done yesterday. We broke below this Fibonacci. So the real next line here is going to be 10,250, another 1,000 points below where we are right now, basically. another settlement down there is going to start making it look pretty weak here, guys. So keep your eyes out for that. I don't know that the pain is done here. We continue to get lower lows, lower highs. Again, like we talked about, this was looking like a high there, but I think that's getting discounted now because it was just a little bit of a blip. Now we're looking at some of these other targets. I'm going to have to start squeezing this down a little bit. This is from the pandemic high and pandemic low with measured moves off of that. All right. So my Fibonacci's aren't all set up exactly the same because I want to get some different ideas going on. That said, we are near that low. We had probably need to drop this out to like a 3-year, 1-day chart to get a better look at this. You can see right now we are looking to test that pandemic high. So a lot of markets retracing to those levels. We could drop the E-mini S&Ps out to a 3-year chart here. See that is just slightly off of that, but you can see the next line that we're looking for is based on these measured moves from the pandemic. This 50 is based on the pandemic low to the pandemic high. So a lot of folks, when we're talking about retracing, will look for these types of Fibonacci's. The 50 Fibonacci is a key area. If we break below that, then obviously folks are going to be looking for like 32,000 in the E-mini S&Ps, but I think that this 35,000 is the next stop for equities. We aren't done with this sell-off here. I don't think that there's enough people clamoring that this is an issue at this point. Right now, we're getting consolidation heading into today. What do I expect for the rest of the day? Keep your mind on or focus on the afternoon session. All right. We're going to see a lot of institutional money coming in early in the morning. That could be buying, but I would expect to see more continuation of selling going on. And late in the day today on Friday afternoon, there's going to be the institutional money start to dry up. As we used to say on the floor, it is a rush to the Hamptons in the summer. Friday's afternoon, Eastern time, we'll see that volume start to really suck up or dissipate, if you will. And markets could get a little bit of a rebound as the retail investor is looking for value in the markets. They probably see some of these big tech names start to make some moves to the upside because they had a massive correction. And I'm sure folks are thinking that it is an opportunity to get involved in some of those names. I'm not going to discount that. Not probably a bad idea to start layering in. I would not go both hands buying. I would try to do very little, maybe a half a tranche or just a couple of contracts here and there and start layering it in. I prefer to do that by selling puts, and I talk about how to do that as well. Don't have really enough time to do it today. So how do we see this? Probably some selling early on in the day, late in the afternoon. Be wary that the institutional money will start to rush to the Hamptons, and the retail folks are going to be looking for probably value in there, and we could see a bit of a blip. I would not overly jump on board with that buying opportunity at the end of the day because Monday is a different world. We don't know what's going to happen this weekend, so that's why those institutional folks will probably be selling early on in the morning. All right. So that's about all I got. I don't have any trades that we're really looking at today. I'm waiting for the markets to really pick a direction. Right now, we're kind of in that influx. I think we're going to see some continuation to the downside. What does that mean? Well, that would be looking to sell some covered calls. We've gotten a little bit of a bounce the last couple of days. Are we going to get a continuation to the downside? It's not going to be one of these V-shaped recoveries here, folks, because of the recession and everything else that's going on. Like it's going to be a little bit different. We're going to have to grind this out a little bit longer, I think, or get the administration to start talking about opening up some oil fields. That's up to you and I. We got to start clamoring for that. Get those guys to push the pump. All right. Maybe that'll be our catchphrase, push the pump. All right. Hope you guys all have a great weekend. And if you can't take that, take it easy.